Imagine waking up every month to an extra $5,000 in your bank account. Picture the freedom and peace of mind that comes with knowing you have a steady stream of income flowing in, without having to clock in at a 9-to-5 job. Not from a job, but from your investments. This is money working for you, growing and multiplying while you sleep, travel, or spend time with loved ones. This isn't a fantasy, folks. This is the power of dividend investing. It's a strategy that has been used by savvy investors for decades to build wealth and achieve financial independence. We're talking about building a portfolio that generates serious passive income, month after month. Imagine having a diversified collection of stocks, each one paying you a portion of their profits regularly. Now I know what you're thinking. $5,000 a month sounds impossible. It seems like a distant dream, something only the wealthy can achieve. But trust me, it's achievable with the right strategy and a little bit of elbow grease. It starts with educating yourself about the stock market, understanding how dividends work, and identifying the right companies to invest in. We're going to break down the steps, the stocks, and the mindset you need to make this dream a reality. From selecting high-yield dividend stocks to reinvesting your earnings, every step is crucial. Get ready to transform your financial future, because we're about to dive deep into the world of dividend investing. We'll explore the best practices, common pitfalls, and how to stay disciplined in your investment journey. We'll show you how to turn small, consistent contributions into a life-changing income stream. It's about making smart choices and staying committed to your financial goals. This is about taking control of your money and building a future where you answer to no one. Imagine the possibilities when you no longer have to worry about financial constraints. Are you ready to get started? Let's embark on this journey together and unlock the potential of dividend investing. Your path to financial freedom begins now. So, what exactly is dividend investing? It's simple. You buy shares in companies that pay dividends. Think of it like owning a piece of a profitable business. As that business makes money, it shares some of those profits with you, the shareholder. These payments are called dividends, and they're typically paid out quarterly. The beauty of dividends is that they provide a consistent stream of income, whether the market is up, down, or sideways. Now, not all companies pay dividends. Some reinvest all their profits back into the business, hoping for faster growth. But for those seeking passive income, dividend-paying companies are where it's at. We're talking about established, profitable businesses with a long history of sharing the wealth with their investors. Dividend investing is about building a portfolio of these cash-generating machines, creating a reliable income stream that grows over time. It's about planting seeds today that will bear fruit for years to come. One of the most exciting aspects of dividend investing is the power of compounding. This is where things get really interesting, folks. When you reinvest your dividends, you're buying more shares of the company. More shares mean more dividends, which you can then reinvest to buy even more shares. It's a beautiful cycle of growth that builds upon itself over time. Think of it like a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows exponentially larger. That's the power of compounding in action. Even small starting investments can grow into significant sums over time thanks to the magic of compounding. The key is to start early, stay consistent, and let time work its magic. Remember, the greatest wealth-building tool you have isn't some fancy investment strategy, it's time. The sooner you start, the more time your money has to grow. Now that we understand the basics of dividend investing and the power of compounding, let's delve deeper into the strategies that can help us achieve our financial goals. Building a dividend portfolio that generates $5,000 a month is no small feat. It requires a focused and disciplined approach, along with a clear understanding of the market dynamics. First and foremost, we need to select the right stocks. This means conducting thorough research and analysis to identify companies that not only pay dividends but have the potential for long-term growth. We're not just looking for any company that pays a dividend, we want companies with a proven track record of dividend growth. This ensures that our income stream will continue to grow over time. Companies with a history of increasing their dividends are often referred to as dividend aristocrats. These companies have demonstrated their ability to generate consistent returns for their shareholders. These are the dividend aristocrats, the elite group of companies that have consistently increased their dividends year after year, even during economic downturns. Investing in these companies can provide a stable and growing income stream. Next, we need to diversify our portfolio. Diversification is a key strategy to manage risk and ensure that our investments are not overly concentrated in one area. By spreading our investments across different sectors and industries, we can reduce the impact of any single sector's poor performance on our overall portfolio. Don't put all your eggs in one basket, folks. This age-old adage holds true in the world of investing. Diversification helps to mitigate risk and provides a buffer against market volatility. Spread your investments across different sectors and industries to reduce risk. This way, if one sector takes a hit, your entire portfolio won't be sunk. If one sector takes a hit, your entire portfolio won't be sunk. Diversification is not just about spreading investments, it's about strategic allocation to balance risk and reward. Finally, we need to be patient and disciplined. Building a dividend portfolio takes time and requires a long-term perspective. Building a dividend portfolio takes time. It's important to stay committed to your investment strategy and not get swayed by short-term market fluctuations. Don't expect to get rich quick. The key to success in dividend investing is patience and consistency. Avoid the temptation of get-rich-quick schemes and focus on building a solid foundation for long-term growth. Stay focused on your long-term goals, reinvest those dividends, and watch your income stream grow over time. Reinvesting dividends can significantly accelerate the growth of your portfolio, and watch your income stream grow over time. With patience, discipline, and a well-thought-out strategy, you can achieve your financial goals and enjoy the benefits of a growing dividend income. Section 5. Stock Selection, Picking the Dividend Champions. Choosing the right stocks is crucial for any successful dividend portfolio. It's not just about picking any stock that pays dividends. It's about selecting those that offer sustainable and growing dividends over time. This requires a keen eye for detail and a deep understanding of the market. Remember, we're not just chasing yield. We want sustainable dividends from companies with strong fundamentals. This means looking at a company's financial health, its earnings, and its ability to generate cash flow. A high yield might look attractive, but if it's not sustainable, it could lead to disappointment down the road. Look for companies with a long history of dividend payments and a track record of increasing those payments over time. This historical performance can be a good indicator of a company's commitment to returning value to shareholders. Companies that have consistently paid and increased dividends over decades are often more reliable. These are the dividend kings and dividend aristocrats, the cream of the crop in the dividend world. Consider companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble. These companies have not only paid dividends for decades but have also increased their payouts year after year, showcasing their financial strength and commitment to shareholders. These are blue-chip companies with strong brands, global reach, and a history of rewarding shareholders with consistent dividends. Their products are household names and their business models are robust, allowing them to generate steady cash flows even in challenging economic times. Don't be afraid to look beyond the big names though. While blue-chip companies are a great foundation, there are also many smaller companies that offer excellent dividend opportunities. These smaller firms can sometimes provide higher growth potential and diversification benefits. There are plenty of smaller companies with solid dividend track records. These companies might not have the same brand recognition as the giants, but they can still be valuable additions to your portfolio. Look for those with a history of stable earnings and a commitment to returning capital to shareholders. The key is to do your research, analyze their financials, and make sure their dividends are sustainable. This involves looking at their payout ratios, debt levels, and overall financial health. A company that overextends itself to pay dividends might face difficulties in the future. Remember, we're building a portfolio for the long haul. This means thinking about the future and selecting companies that can continue to perform well over the years. It's not just about the next quarter or the next year, but about the next decade and beyond. We want companies that can weather economic storms and continue paying those precious dividends year after year. Economic downturns are inevitable, but strong companies with solid fundamentals can navigate these challenges and continue to reward their shareholders. This resilience is what makes a true dividend champion. Diversification is key, folks. By spreading your investments across various sectors and industries, you reduce the risk of any single investment dragging down your entire portfolio. It's like the old saying, don't put all your eggs in one basket. This approach not only protects your wealth but also provides opportunities for growth in different market conditions. Now let's talk about the blueprint for achieving $5,000 in monthly dividends. Start by identifying high-yield dividend stocks and reliable dividend-paying companies. Then, calculate how much you need to invest in each to reach your goal. Remember, consistency and reinvestment are your best friends here. By reinvesting your dividends, you can take advantage of compound growth, accelerating your journey towards that $5,000 mark. Turning your dividend dreams into reality requires patience and discipline. It's not an overnight success story, but with a clear plan and regular contributions, you can steadily build a portfolio that pays you consistently. Monitor your investments, stay informed about market trends, and adjust your strategy as needed. Remember, every small step brings you closer to your financial goals. Embracing the journey to financial freedom means celebrating the small victories along the way. Each dividend payment, each milestone reached, is a testament to your hard work and dedication. Stay focused, stay committed, and enjoy the process. Financial freedom isn't just about the destination, it's about appreciating the journey and the lessons learned along the way.